Tariffs are exploding the market, and of course, we're going to break it all down for you guys today and the impact on crypto. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor today, iTrust Capital. This is one place that you can just start to put things away, let it sit in there, and build in your IRA. That's the way that you do long-term investing. Check out iTrust Capital. Use our link down below to get a $100 funding reward and get started with that. Very easy to do. You can put almost any kind of token in there, gold, silver, all that kind of stuff. So use it if you guys are looking at going long term. Let's go into a couple of points. Kobe letter is hitting on all of this. The tariffs now live, 25% tariffs on all goods from Mexico, 25% tariffs on all goods except energy from Canada, and then 20% tariffs on goods from China to the U.S. This was double stacking too, that was 10 on energy from Canada to the U.S., and then 25% retaliatory tariffs up to 155 billion of goods to U.S. From Canada to Canada. So you can see the trade war has officially begun, and I think it's only going to get worse from here until we start to see some of these things soften up. And there's a lot of people looking at this with where these tariffs may force the hand of the Fed, and I'll get into that in a second. I do want to go to a couple of clips, though, because everybody else right now is just saying this is absolutely bonkers. Take a look.
But they call this the dumbest trade war in American history, and we agree. The retaliatory tariffs will be coming from those countries. This is going to make auto parts, energy, things that Americans use more expensive. Republicans are acknowledging that everyday Americans are going to feel it.
All right, so that was one clip. Then, of course, you have to bring in the Canadian Prime Minister, Justin Trudeau. Listen what he had to say.
But Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do. We two friends fighting is exactly what our opponents around the world want to see.
All right, so a lot going at it right now. One thing I will say, if you know Trump and if you've understood his psyche, he does not like to be called dumb, and I don't think he likes losing. So you have to kind of position your position into where it makes as though he might have won, but in reality, maybe it's a fair deal or a loss. I think those are the things that many world leaders are really grappling with right now. Well, you look at that, and then you have to kind of consider, maybe is this working? Because you have Honda now, who has decided to produce next generation Civics here in the United States, in the United States instead of Mexico. So there's a lot happening here, guys, that maybe we don't fully understand. I'm surprised that we're starting to see movement so quickly, but maybe there has been something working between Lutnick and a lot of these other nations that is behind the scenes. I don't know, but for this to drop at this time, very intriguing things for sure. Other things I want to hit on is, what does this mean to the U.S. and the American consumer? You, me. What about prices? Well, the Target CEO tells you a little bit. Take a look.
Midnight has come, and they are in place as far as we know at the moment.
We've done a lot of scenario planning, and we've tried to understand what are the different options that we might have to face. We'll go back and understand the implication of Canada and Mexico. We've been looking at that. We know for certain categories, like fruits and vegetables, where during this winter season, we depend on Mexico for a significant amount of supply. Those are categories where we'll try to protect pricing, but the consumer will likely see price increases over the next couple of days. If there's a 25% tariff, those prices will go up.
For things like what? Strawberries, avocados, bananas, what are we talking about?
You've got that list right.
Is that so?
Those are some of the key items.
And those prices could change within days in the stores?
Could change certainly over the next week.
All right, so this is going to either put a lot of pressure on American citizens, or it's going to put the pressure on American citizens to not buy these things, which will immediately affect the economies of these other nations, including these tariffs that are starting to hit. Here's Portnoy kind of going at it. Hey, if we're going to see a trade war that goes like this, that tanks the stock market, which is what has happened, we're going to need a little bit more pumping from crypto, Donald. So let's get on it. Of course, having a little bit of fun with that, but not necessarily anything that is funny at all. Goldman Sachs is saying, hey, there is a small chance, though, that the U.S. economy could slide into a recession. I put a poll out this morning on Twitter, and you look at some of the things I was hitting on because technology stocks were falling, et cetera. Right now, 58% of those that answer the poll say, yeah, we might be heading for a recession here. Let me know what you guys think. Drop some notes in the comments down below. I'd love to get your feedback on where you guys think. Just say yes recession, no recession, and that'll help us on getting some information. Bitcoin is no longer a safe haven as 82K price dive now leaves gold back in command of the potential asset that could win over all of this. Now, the question I think going forward is Bitcoin digital gold? Peter Schiff seemed to think so not too long ago. And is there an opportunity to maybe buy Bitcoin at a better price? Or are we possibly looking at the beginning of a much deeper dive in crypto? Macro Alf comes in, says things are getting a little bit ugly for Trump. First time the market turns seriously against him on tariff announcements, this being the S&P 500. Stocks are down, bond yields down. Not even the U.S. dollar can rally. So a very clear statement that tariffs are very bad for the U.S. economy. My guess is that Trump is seeing all sorts of pressure from some of the wealthiest individuals in the United States, because I'm sure their portfolios have started to suffer. Even Berkshire Hathaway repositioned quite a bit. So in a situation where you couldn't run to get to safety, that's the real question everybody's asking. Do you go to health stocks, defense stocks, potentially, or gold and Bitcoin? Right now, it's still leaning gold, Bitcoin, and defense stocks out there that are the potentials. This is how will the Fed react? Because this could pivot everything. And then this is the thing I was getting at earlier. What if this is a plan all along, trying to get the Fed to force their hand or push enough pressure on inflation to pivot the Fed's position and then come back in and clean it up later? Look at this clip.
Hey, good morning, Carl. Fed Fund futures on the move, responding to tariffs by President Trump by pricing in rate cuts from the Fed much more aggressively. Markets now pricing in 3 cuts from the Fed this year with a greater than 50% probability of a first cut in June, a second one in July, and now a third one in September. But will the Fed come to the rescue, and how quickly? Fed officials have said they're going to respond to weakness in growth and employment, but they can only do so if inflation is headed to the 2% target and inflation expectations remain under control. The road to a June cut runs through this. Moderate tariffs, that would mean backing off the current levels against Mexico and Canada, weaker job growth and declining inflation, along with contained inflation expectations. Markets seem to be betting on that scenario, but the Fed could find it tough to cut while tariff-induced price hikes are working their way through the inflation indices, and until it's clear to policymakers they face one-time price hikes, not a rekindling of inflation. Guys?
I think that's the key that we're going to have to watch right now. If you look at Trueflation, this has been happening over the last 30 days, a significant drop off of that 2.26 high to where we are now, which is around 1.42. This is on Trueflation. So has there been an immediate effect just from the sense of these tariffs causing pause from consumers, which obviously drives demand lower? If driving demand lower, then obviously you see inflation starting to slide in. That's the real question going forward for the Fed. And I think if you look at the Fed right now, decision in, let's go to March. Right now, March is pretty much a no change. Let me kind of zoom in on that for you guys so you can see it a little bit better. Pretty much a no change right now, but it is dipping a little bit down. So now we're down in the 92% range, and we still have a little bit to go. So this is March 19th. Now you flip over to May, things start diving quickly into possibly a wash, meaning if things continue to go on this track right now, May could be the time in which we see an actual rate cut occur. And then June is just an absolute free-for-all. It's flipping completely, saying that, yeah, that's when it's going to occur. And of course, this could be the cycle that starts to move things around. Remember, timing is very, very important right now because of how these stocks, securities, crypto, all these assets are starting to work their way down. Is there a potential opportunity here for a buy-in? That's what everybody's watching. If you have the money to buy in, that's the other problem right now. Scott Bessent talks about this. Well, hey, what if we cut your taxes? And that's what we're anticipating coming out of the crypto summit on Friday, is most likely some sort of tax incentive or something that could benefit American crypto company holders. So take a look at this clip.
You know, on the economic side, I think thus far one of the biggest wins for the American people is since Election Day and since inauguration, mortgage rates have come down dramatically. Both the level of the 10-year bond and the spread between the 10-year and mortgage rates, which I think is an effect of the bank deregulation we're going to do. So that I anticipate.
Does that affect credit cards too?
Well, the interest rates will affect credit cards. It'll affect auto loans. And the bottom 50% of Americans over the past 2 years have gotten crushed by these high interest rates. So we're set on bringing interest rates down. And I think that's one of the great accomplishments so far.
All right, so there's two tracks that you could be looking at here. One, of course, if interest rates start to drop significantly, maybe it leaves a window open for people to join the new economy. The question is how do they do it if they don't have a job or if they're continuing to see household goods and prices driving into that budget? That's the problem everybody's facing. Chamath came in, Polymarket, he comes in from the All In podcast. He had an interesting statement here. Let me zoom in on that. Trump is more popular with young people than old. Most young people don't own stocks. So really, right now, they're very asset light. So they're not necessarily being hit by any of the security side of things, what we're seeing currently in the market. Trump's also more popular amongst working and middle class, also asset light individuals. So it's not really affecting some of his base, meaning the stock market, the crypto markets. But the interesting thing is how does he unite? So if he figures out a way to get rents lower, then he's going to bring young people and asset-like working people into a reliable voting bloc for the foreseeable future. So he could be securing up, ensuring a Republican White House. Remember, we had Obama in the White House. Outside of the Trump thing, you could have had a back-to-back 12-year run with Obama and Biden. Maybe that's what Trump is going for in reconstructing a soft fall of the market to try to make things work for the middle class. We'll see how all this plays out, but what I do think is that we are seeing havoc in the streets. Chamath goes on to talk about sentiment and the economy, because this is very critical right now. Take a look.
So I think the question that I have is, if we go through a prolonged austerity program and the frustration amongst the American populace builds, what's the release valve? So you have this coalition of the asset light, working and middle class, and then you have other people, patriotic business people and patriotic business owners and technology people that care about innovation, that MAGA has been able to corral into a coalition. My point is, if that is the consistent, reliable thing that cements political power multiple elections from now, and we've seen this before in the past where Republicans can go on a 3-term run or a 4-term run, Democrats have as well in the past, it is bad news for the stock market and it is bad news for asset owners because it doesn't reward the constituents. Back to Friedberg's point. So if you are going to feed your constituents and your constituents don't own stocks and your constituents don't own homes, or they are so wealthy that they can be inoculated from a massive drawdown in those asset categories, what do you think the winning strategy is? I think if you want to cement political power, I think it requires a walking down of these asset markets in a meaningful way. That's stocks and that's real estate. And I just don't see any other way around it.
So that's a big reset right there, walking down the asset market. And remember, you gotta look at where the market is right now. What we've seen in the situation coming in from not only the S&P, but also the highest really crypto market, all of those. And then if you look at the real estate market, very much to what Chamath is saying, maybe this is just a releveling of that. And if that is the case, there's going to be a lot of people in the asset rich that are going to get hit with this. So very interesting times ahead. Now, with that being said, now you have to look at that position. Let's flip over to another position right here. This is coming in from Tom Lee from Fundstrat. And he talks about a little bit more where he thinks the market is going, whether it's short-term, long-term. Take a look.
So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And I think the consumer surveys themselves are actually very flawed right now, and they're picking up less the fact that egg prices are up, and I think more political respondents. Like the UMich survey, there's a huge bifurcation between Democratic views on inflation versus Republican. And the bond market itself is giving very conflicting messages about inflation. In fact, I would say if I looked at what the bond market's saying, I think it's saying there's no problem with inflation. The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused, well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral.
All right, so that's back to that point we mentioned earlier. Is Trump, in a way, forcing the hand of the Fed, which is going to be one of the governing sectors out there for long-term investment and stability? That's the other thing that everybody is looking for right now, is stability and some sort of predictive, not that you're trying to predict where the market is going, but knowing that you're not going to see an administration that's going to be doing daisy chain and yo-yo kind of positions that have been out there. Now, all of this could be part of a big plan. And you look at, I'm not saying that it is, I'm just saying that you have to look at how, politicians play. And Trump is not really a politician. He is a business guy that looks at negotiating tactics. One of the negotiating tactics he did this week was he kicked Zelensky out of the White House. And then, sure enough, we get a flip. And Vladimir Zelensky says now that Ukraine is ready to come to the negotiating table. We're ready to work fast to end the war. And the first stages could be the release of prisoners and the truce in the sky. So this is a big shift, guys. This would be a major shift, and it is exactly what Trump was trying to get Zelensky to do when he was at the White House. That doesn't necessarily didn't come through. They, of course, signed the minerals deal. Now the U.S., it looks like they're going to sign a minerals deal with Russia, which is going to displace China potentially out of the East. There's some very intriguing things happening right now. And if you look at the, kind of the checkboard of what Trump has been saying all along, make America first, try to get this war over with, look at the reset of the economy. And I think he's trying on all ends to do that. The question, we are 1 month in. What is left as we start to see this construct build out? Last point I want to hit at is the strategic reserve. And this is one that everybody was freaking out yesterday, because if you're not one of those holders that fell into Bitcoin, ETH, Cardano, Solana, and XRP, everybody was pretty much upset. Or if you were one of those, you were, happy or believed to be happy. The question, though, is how do you get assets into this strategic reserve? Here's a clip from John Deaton. You guys remember John Deaton. He has a good idea here. Take a look.
XRP is one of the cryptos that are going to be in this reserve.
Correct.
Is Donald Trump now going to drop? He has to drop the case, because if he doesn't drop the case, U.S. holdings are going to go down. He's going to hurt himself.
Liz, Charlie, imagine what 4 years difference. The last 30 days of the Trump first term, Jay Clayton, as the SEC chairman on the way out the door, filed this Ripple case. 4 years later, within almost 30 days of the second term of the presidency, now XRP is going to be part of the crypto reserve.
Does that mean he drops it? He
has to drop it. We just had a United States president stamp of approval on XRP.
He doesn't drop the XRP case, the American taxpayer is going to get screwed on this.
Well, that's one thing. Here's a thought. How about Ripple pays that $125 million fine that Judge Torres issued and start the crypto reserve in XRP?
John, why is...
Boom. There you go. That's a great statement from Deaton. And that would do two things. And remember, I said earlier in the episode, Trump likes to win or look to be in a position of strength. So if they do hold it, say, yeah, we're going to hold that, we're going to pay the fine. And XRP has already agreed to this and said, yeah, we'll go ahead, or Ripple's already agreed to this, we'll pay the fine. And then Trump says, yeah, we're going to slide that fine right into the strategic reserve. This would be the kind of chess play that I think is happening that could be a huge move for, now on other assets, because many people have talked about this, of seeding the reserve, meaning chains could come in, whether it's Cardano, Avalanche, HBAR, a lot of these different companies that could seed assets, tokens into the reserve for the U.S. government. Now, would that be good for the chains? Maybe not necessarily, but for XRP and Ripple, it could have a longer play and a lot more implementation going forward. So this could be huge for XRP going forward. And I think all of you guys, you got to let me know, what do you think about this particular reserve, and what do you think is going to happen on Friday at the Crypto Summit? Let me know down in the comments below. Check out, of course, the Diamond Circle. It's a great place to get additional content and also get into our Telegram group. We only have one Telegram group. Don't fall prey to some of these scammers that are out there, guys. It's official Paul Barron. It's that simple. It always has been, always will be. Use that link down below. Always come back to the source when you're checking out any of these things out there, and just be cautious on this stuff out there, especially in these markets. So things are getting a little crazy. Follow me out there on X at Paul Barron. We'll catch you next time right here on TechPath.